Searching for just the right job? Whether you're looking for full-time, part-time, or seasonal work, you can get started today. Amazon Jobs offer the whole package with great pay and flexible shifts that allow you to choose when and how much you work. Find a warehouse close to home and discover the role that works for you. To get your application started for an hourly job, go to amazon.com/apply. That's amazon.com/apply. Amazon is proud to be an equal opportunity employer.
My name is Joanne. This is my father.
I know what's happening with my body. I won't be able to take care of myself.
When the time comes to get more support for your parents, CARE can help you find qualified caregivers nearby.
What would help me is if there could be somebody there that could check in on you.
I realize I have to do it.
The best decisions are made with CARE. Find help for your mom or dad at care.com.
You are listening to an entertainment program put together by a company called Financial Ineptitude. Anything said on this show is not an endorsement or professional advice. Would you really want to tell a court of law you were suing us because you thought taking financial advice from two idiots on a podcast put out by Financial Ineptitude was a good idea? Really? Clown hat smiley face.
Well, hello and welcome, everyone. You've made it to the China shop. Get on inside. I'm shopkeeper Dan. With me, as always, is Kyle, the creator of financialineptitude.com. Kyle, how are you doing today?
I'm doing pretty good. I had a good week. A fun week.
All right. Hey, good fun week.
How about you?
Well, you know, I got a vasectomy this week, so that's been fun.
Feels like you were kicked in the nuts?
Yeah, by a horse.
Don't call people names.
Oh, yeah, it's been I've been heavily medicated, so I'm fine.
I've noticed.
Come on into the shop with us today, folks. Sit back, relax, hedge against the rage machine. We'd like to welcome any new listeners just joining us. We're here smashing our way through a complete set of fine china, sharing those ever-growing strategies for maximizing gains and cutting losses, shooting the shit about the news, just having a grand old time. Woo. If you are new to the shop and stock trading in general, you can always check out our knowledge and resource centers on financialineptitude.com or give one of our many beginning trading episodes a listen. We'll have all those links in the episode description. But the best place to be is come over and join us on our free Discord server. We get on there just about every day. It's just so awesome. It's me, Kyle, a bunch of amazing people, no paid tiers or special access areas, because fuck that shite. We're trading together, laughing together, sharing stuff together.
Learning together.
Yeah, learning from each other. Mm-hmm. Really, I think the best thing is it's just a support group, because trading is mentally challenging. You know, I don't know about you, Kyle. It brings me down all the time.
I've had the highest highs and the lowest lows since I started trying to do this.
Yeah.
Sometimes in the same hour.
Right. Usually. Kyle, when they join that server, what should they do to get themselves some free swag?
They should contribute and post and pay me money.
Yes.
Sorry. No, that's the free stuff. Just shoot me a DM with your mailing address. We'll get you something sent out your way. You got shot glasses, beer koozies, stickers, all kinds of good stuff. And there's also a shop.
Oh, yeah. And then, if you can't get enough of the amazing free swag, you can go ahead and buy the swag. We'll sell it to you. We don't care.
Or smash your free one and then get a replacement.
There you go. We're just so glad everybody's here. We have a lot of fun. Always better with friends. Kyle, any show news to report?
Yes, of course. There's always show news.
Okay, I'm going to drink some whiskey while you talk about that.
All right. It's a lot of recording. Let me just get through here. Let's see. Next week, we have Cece Legatter, the founder of Options AI. Let's see. Then we've also just finished recording too with Shlomo Freund, financial coach and digital nomad. Next week, we'll be recording with Phil Muscatello, host of Shares for Beginner podcast. Then we got Andrew Conroy, the Wasatch Squatch on Twitter. James Woodall from Woodall Wealth Management, then Martin Sains, author, runs Bequest, which is a note investing firm. Kevin Rendino, the CEO of 180 Degrees Capital, and Eric Smolinski, a retail trader and creator of ES Invests.
Wow.
And on Monday, we're also recording the next installment of Back to the Futures.
Yeah, that's the big one right there.
That's the one. You can just edit down all the other ones or speed it up.
Yeah. It's the only one anybody cares about. We have got a busy schedule, man. Wow.
Yeah, we're probably going to have to drop some bonus ones just to get through them all.
Right.
So be on the lookout for that in the next month.
But until then, we have got a keen, kind, kingly show for you today. Lots of market-moving news, plenty of stocks on the radar, and more options than meme stock shares sold by Ryan Cohen this week.
Oh, we've got all the options, huh?
Millions of them. And please, folks, reach out to us. We adore your messages and comments on Twitter, on Facebook, on the Discord. We'll have that link in the episode description. If you're old school, you can send us an email to 2bulls@financialneptune.com. That's the number 2bulls. Or you can give us a phone call at 725-22bulls. That's 725-222-8557. Maybe you've got a hot stock tip. Maybe you just want to tell us about a great trade or terrible trade you just made. Or maybe you and your lover just hanging out in your Saturn bungalow and some technocrat from Earth shows up with his angry robot and just ruins your day.
Oh, God. Is that the movie we're watching tonight? Or tomorrow night? Or tonight? Saturday night, I guess.
This week's awful movie, Saturn 8, starring Kirk Douglas, Farrah Fawcett, and Harvey Keitel.
Is it Saturn 8 or Saturn 3?
It's Saturn 8, because that's the moon where their bungalow is.
Ah, I've been calling it Saturn 3. I think it is Saturn. Are you sure it's not? Is there two of them?
Okay, it is Saturn 3. My bad.
Okay. Whew, thought I was losing my mind.
Stay off drugs, kids, so you could tell the difference between numbers.
I gotta say, the trailer looks very similar to Enemy Mine.
Enemy Mine?
Yeah, just the can you call it CGI or special effects?
You can call it. You can call it special effects, but it's definitely not CGI.
No. Oh, that should be a fun movie. Yeah, join us on the Discord if you want to watch us. Watch that with us. That'll be August 20th at 7 p.m. Central.
Mm-hmm. It's gonna be a good time. Good time. All right, Kyle. Let's go over those bet results.
My favorite part of the show. Ever since Flary stopped by and showed us how to do it.
Hey, our last bet pick had nothing to do with Flary.
No, it did. And the one that we wanted to do before he tainted our opinions would have worked out pretty well too. No, we shorted Meta, which opened the week at $178.96. Hit our first take profit at $170 on Friday, and ended up closing at $167.94.
Ooh yeah!
All right, so that takes our total for the week up to $638.98.
Wow. Okay. New
Crushing
bet
it, huh?
format. We kick ass when we're combined.
We do better together, yeah. Don't get penisy. Random still managed to be pretty impressive, though. Had one of the few stocks on Friday that was actually green for most of the day. I had MUSA. Yeah. MUSA, which opened at 290, closed at 299.48. So Random had a green week, but he's still well behind at $534.57.
Oh, wow. We're crushing it this month.
Yeah.
Golly.
How do we do side bets now?
We can't.
Ah, shit.
We can't. Unless they're like real money bets between us.
Or if we just bet who has to do the consequences.
Okay. Yeah. Yeah. That would work.
Yeah.
Yeah. I am not mowing your grass, by the way.
Fuck that. I would have a hard enough time doing it myself.
All right. Let's move on. Talk about some news.
Dow drops deep on moving inflation, COVID frustration, war damnation. We're just bringing you the fucking news. You gotta recognize the game if you don't wanna lose. We're just two bulls trading information.
Yeah, we are.
Rioters raiding, insider trading, taxes are raising, bills on the hill. We got a crypto mill. No, they ain't growing weed. When the Fed speaks today, it's some shit we don't need.
Sing it, Dan.
Two bulls trading information.
What?
Two bulls trading information.
I'm inclined to agree.
Two bulls trading information.
That is accurate. Very accurate. What information? All right, Dan, you want to lead us off?
Sure. I'll lead off with what I consider one of the big economics news stories. many CEOs lately are talking about the economics term elasticity in their conference calls.
Like their underwear?
Yes, yeah. They're worried about how elastic rubber and waistbands are. No. Elasticity is the economics term describing how likely people are to keep buying a product when the price goes up. So,
fuck them.
So if like you're Coca-Cola and you raise the price and people switch to like store brand cola, you would call that a price elastic good. Like soda would be price elastic. If you're like toilet paper and you raise the price and people are like, well, I still want to wipe my ass, and they're going to buy it anyway, then it would be inelastic. So all of a sudden, from McDonald's to Coca-Cola to Hershey, corporate executives are really preoccupied with inflation and elasticity. Yeah, squeezing
our last dollar out of us.
Yeah, before we stop buying their products.
Or having money.
Or right. I don't think they ever considered that. Like, what if consumers just run out of money? Wait a minute, we took it all. Shit! Now what are we going to do?
Is this something that's new? Because that seems like just normal business practices, I would think. You're always trying to price it at like the best point to get the most return.
Sure. The concept isn't new, but the fact that so many chief executives and financial officers are talking about it in earnings calls is new.
Yeah, okay.
And we're seeing both sides of the coin. Like Keurig Dr. Pepper is like, hey, we're doing good. We've got modest elasticity. Marriott is saying, we're fine. We demand is continuing to strengthen. And my favorite, Callaway Golf. I'll actually quote Oliver G. Brewer III, CEO. To offset inflationary pressure, we have raised prices nicely this year, and as the avid golf consumer is both affluent and passionate, there has been no discernible pushback. Way to go, Callaway Golf.
Yeah, just stick it to them. Hope they don't notice.
Stick it to them. Well, he's saying like they got money. They're gonna keep. Yeah, rich people are gonna keep playing golf. Translation.
Right.
And obviously companies are going to raise prices as costs rise. But the question is are they raising them in line with rising costs, or are they, taking the opportunity to gouge a little bit?
You notice that they don't ever really come down.
Yeah, isn't that funny?
Yeah. Costs went up. Well, costs are cheaper now. What happened?
Well, we've been seeing the other side of the coin for like, companies like Kellogg, and we talked about Tyson Foods. People buying cheaper cuts of chicken. Walmart is seeing significant shifts in what people are buying there. A Southwest Airlines CEO, quote him, Andrew Watterson, leisure travelers have a price elasticity effect where you can't go much higher. Like discount airline travelers are not going to pay more than what they've been paying because they can't, is my assumption.
Right. Well, you're not going to pay more to sit on a shitty flight. You're not going on Spirit because you think that like the price or the value for the good service that you get is like, great value. You're doing it because you're trying to get there as cheap as you can. You
don't fly Allegiant Air with their horrible maintenance records because you can afford it because you like it. Like, I like their frequent flyer program. It's really good.
Frequent crasher.
I like it when the bolts fall out mid-flight. It reminds me I'm alive.
Oh, Jesus.
So, it's when the CEOs start talking about it, I guess maybe things will change. I don't know. To tie a bow on it all, Kyle, there was an analyst at Morgan Stanley named Kimberly Greenberger, or Berger, apologies, Kimberly. In an interview, she mentioned that people, because of the pandemic, have already changed their buying patterns.
Mm-hmm.
So it looks like they already know what to do as things become too expensive. So it's because so many people have already broken long-term habits.
Oh, right.
We can those long entrenched habits, the adjustments this year to inflationary pressures are already in their minds. They're already set to do them.
That's actually a great point, because it's been how long since the COVID? March 2020, so it's been 2.5 years now.
Yeah.
Like that's plenty long enough to create new habits for people who had to pinch pennies because they got laid off or hours cut.
Mm-hmm. But I think that whole thing goes into one of your stories, doesn't it?
Yeah, I got somebody talking about the S&P 500 earnings for the second quarter is claiming that the only reason why they're better than expected was because of one sector, and that sector being energy. Overall earnings per share growth is slowed slightly as results from retailers, many that ended in July in the past week, had reported overall declines even as revenue rose. After 95.2% of companies reported through this Friday, the aggregate blended EPS growth, which includes reported results and estimates of the still to be reported results, was 6.3% down from nearly 7% growth seen. Was 6.3%, sorry, down from nearly 7% seen earlier in the month. But still up from 5.4% from the first quarter. So 73% of retailers beat EPS expectations. EPS growth for the group was still a negative 6.4%.
What? Oh, because their expectations weren't high.
There's a big difference between what you're expecting and what you actually did last year.
Oh. So, like, if I expect, like, we're going to do 10% shittier than last year, and it's like, we only did 8% shittier than last year. Oh, we beat expectations. Hurrah!
So that was EPS growth, but they still had increased revenue, but they're detailing that as being driven by trying to get rid of excess inventory. So revenue for the group was up 9.1%, even though the EPS growth was down 6.4%.
Wait. So wasn't inflation also around 9%?
Right.
There we go.
Yeah, that's true. Well, yeah, I mean, you think about it, you start cutting prices to try to get rid of inventory because there's a cost of carrying all that stuff.
Right.
So when they start selling it for less, like they may have revenue showing up, but that's not necessarily net
profit
income or profit.
Yeah.
So of the 11 sectors, 5 have seen EPS decline, 6 have seen EPS increase, but the main reason for growth was energy, which saw their earnings per share rocket almost 300% from a year ago.
Wow.
Yes.
300%.
Pretty impressive. Pretty fucking impressive. How did their earnings go up if the price of energy is going up and they're just, raising in line with costs? Like, how does that work?
I think somebody is being sneaky there somewhere.
The way I think it works, and this is just pure speculation on my part.
My favorite.
If you rely on a commodity like oil, that's what the whole reason for futures contracts are for. So you can plan and know what your cost is going to be. When you buy those contracts further out, depending on like when you're going to need it. So if you're locking in oil at like $40, $50, $60 a barrel, like over the course of like 12 months down the line or so, as energy prices rise, and you can start claiming that, costs of fuel are rising, I need to start raising rates, but you're still using the same cheap stuff that you secured, last year.
Oh, yeah. Yeah, very good point.
And that's why it's so slow coming down. They always seem very fast to raise it, but very slow to bring it back down.
It's never like, the price of oil jumped, but don't worry, everybody. We locked in these low rates, so we won't be raising the price at the pump.
Right.
It's never works that way. Well put, sir. Well put.
All right, what else you got?
I heard a rumor on The Street, that is thestreet.com, the news place. The Great Resignation wasn't that big.
Oh, really?
And before I go too in-depth on this article, I was on Google News and I was like, this story looks interesting, but I want to view full coverage, which goes to a separate page that shows you all the articles about a topic.
Oh, okay.
And there are, I want to say, 20 different articles about this, which is a lot. And I'm going to just read to you the headlines, all these different articles.
Okay, do it.
The Great Resignation wasn't that big. Not changing from pre-pandemic times can lose you workers. Rehiring boomerang employees can benefit employers and workers. The boomerang and quiet quitting work trends. Explained. Economic turmoil is exacerbating the Great Resignation.
All right, I see a bit of a theme here.
New thinking is required to keep employees. I'm getting all over the place. Like, Great Resignation's not that big. That's not that bad. Here's how you can keep your workers. People are going back to their. It's all over the place, man. I don't know what is happening. It's like different corporate messaging. Like, right? Like they're usually all in sync. Why workers won't stop quitting.
I guess it
Right.
could be just whatever you search for, and just make sure you click on it. Is that what we're saying?
Yeah. Where if you actually like show me all of the stories to do with this topic, it'll show you every side of the coin.
Mm-hmm.
Ugh. So anyway, the one I chose was the Great Resignation. Wasn't that big?
Mm-hmm.
Just kind of arbitrarily. I figured I'd pick one to focus on.
Okay.
But I really did want to get a few of those headlines in there just to show the insanity that is the internet these days and the news these days.
Yeah.
Long gone is Walter Cronkite.
And that's the way it is.
Okay, so apparently this news article is saying 1 out of every 11 workers says a job offer made to them has been rescinded in the past year.
Okay. What does that have to do with the Great Resignation?
I don't know. Apparently, that's just part of the headline.
Oh.
So apparently, according to Lending Tree's Magnifying Money survey of 1,000 workers, 29% of American workers have switched jobs in the last year.
That's still pretty high.
That's really
almost 1 in 3. That's pretty great.
Right? And one in 3 workers surveyed would rather exit their current employers for new jobs than switch roles internally.
Mm-hmm.
Only 19% would be willing to accept a lateral move rather than leave.
Right.
And then and this is this is right here is why I chose this one, because I wanted to give this statistic as an example of how you can invert a stat to try and swing it to your bias. Even among those making less than $35,000 a year, 60% would rather stay than go.
Oh, instead of 40% want to go?
4 in 10 people want to quit.
Yeah.
That's huge. That's huge. Oh, yeah. Only 17% are actively applying for new jobs. 13% are looking but not applying. So that's 30% are looking.
Mm-hmm.
3 in 10. Oh, God. But the headline, Kyle, Great Resignation, wasn't that big.
Yeah. I don't think I buy that.
I don't buy it. By their own reporting.
Right. Well, how do you define great, I guess? Anything less than 50% is not great in my book.
If half your workforce, more than half your workforce wants to say, that's a shitty resignation. Call me when 6 in 10 want to leave.
Let's see. The definition of great is basically just above the normal or average.
Well, what's the average rate of workers wanting to leave their job, I guess?
Less than this. Otherwise, we wouldn't have been talking about it for the last year and a half.
Right.
So, yeah, it was great.
Oh, yeah. Uh-huh.
All right. Last story I got comes from JP Morgan. They are sticking by their belief that the stock market could go another 12% at the end of the year.
Really?
They're claiming that there's more than $100 billion worth of money from trend followers that are on the verge of pouring into stocks. Now, as I read this, not just now, obviously this was before, but it was too late to pick a new story. It looks like this came out yesterday because they're making the point that as the S&P gets close to its 200-day moving average, they thought that if it would move above it, then you'd see upwards of $100 billion in fund flows pouring into equities. But this came out Thursday afternoon, not this afternoon. I must have misread the date. Because as we saw on Friday, that did not happen.
Yeah, I mean, it's already over its 200-day moving average, isn't it?
Wait, is it? I thought it was just at it, but didn't quite make it. It tagged it on the 16th, like almost to the tick, and then rejected off of it.
Oh, okay.
But the bank is still reiterating their year-end price target of 4,800.
Wow.
They're arguing that positioning among investors got way too bearish and is set to reverse.
Well, as we've talked about, if retail doesn't sell, we'll never find a bottom.
Keep holding this hostage. Let's see. It was this guy Kolanovic. I don't even know who he is. Where is he? Why is he not mentioned anywhere else in this article? Oh, he's from JP Morgan. JP Morgan's Marco Kolanovic has said that alongside corporate buybacks, Strategies can provide steady inflows of several billions of dollars per day in equities for the next 2 to 3 months. Trend following strategies that were largely short equities this year are covering shorts. He also was saying that he didn't think that people should jump into mega cap tech stocks or the recession proof quote stocks that are trading near all-time highs. He's saying he thought there was a lot of opportunities in the S&P 600 small cap index that is apparently trading at recession level multiples. And he also pointed at the energy sector, saying it still offers an attractive valuation.
Yeah.
And then he ended this with saying, we remain of the view that the 2020s will look nothing like the 2010s, and many of the investment trends, be it in commodity, tech, ESG, or low volume investing, will be turned upside down.
That's a bold statement.
I don't know. Does anybody remember if he's wrong?
No one will remember. I don't even remember his name, and you told me like 30 seconds ago.
Kolanovic? I think it was Colin and Ovic.
Kolanovic.
Yeah, that's it. We should practice these names before we start reading these stories.
No, that's half the fun.
I know. Oh, what were you going to say for?
I was just going to say, I do know on my risk on, risk off charts that I still look at on TradingView, the risk off has been going pretty strong this month. In fact, since mid-July, we've been putting in higher highs and higher lows again.
Nice.
But so has the risk on. Friday risk on was a red day and risk off was a green day. But, if I had to pick one over the other just based on higher highs and higher lows, I couldn't.
Interesting.
So I think it's everybody's right at the moment.
Everything's bullish. Is that what you're saying?
Everything's bullish and everything's bearish.
Oh, okay.
Same time. Yeah.
Well, we were at a pretty key turning point where we could have gone either direction, so that makes a lot of sense. All right. Well, should we move on?
Yeah. You know who always makes a ton of sense?
Like as in pennies?
Yeah. Two bulls in the china shop. We always make pennies.
Oh, yes. We are very good at that.
Someday we'll make dollars. No, I'm talking about the amazing Sue Pullen, of course, because Two Bulls in a China Shop is proudly brought to you by Sue Pullen at Fairway Independent Mortgage and Equal Housing Lender. Sue Pullen is a certified mortgage advisor who focuses on finding the right product for you and your needs. She has over 20 years of experience helping thousands of homeowners, whether it's purchase, refinance, or even do a world famous, everybody's favorite reverse mortgage. Sue will help. She's licensed in 27 states, so reach out and see what she could do for you. Best way to do so? Just give her a call, 520-977-7904, or you can send her an email, spullen@fairwaymc.com. Fairway Independent Mortgage has an MLS number 2289. Sue Pullen has an MLS number 206048. That email again is spullen@fairwaymc.com, SPULLEN. And that phone number is 520-977-7904. Reach out and see what Sue can do for you.
And Two Bulls in a China Shop is also proud to be affiliated with the Trade Pro Academy.
Trade Pro?
Trade Pro Academy is an educational platform that offers institutional trader development programs to new and experienced independent traders. Translation: learn to trade like a big institution.
Like the big boys.
They have got a great staff of highly knowledgeable and successful traders. There's no better place that we've found to learn all you need to know to be that successful trader. Find them online at tradeproacademy.com. That's TradeProAcademy.com. Or just use the affiliate link in the episode description, as it's a great way to support the show, improve your own knowledge and skills. If you join that Discord too, there is that 10% discount code. Just don't tell George.
Yep. It's just sitting there waiting for you. It's like money in the bank.
Did I spell it right?
I wasn't paying attention.
I didn't realize we're having to spell everybody's thing this time.
I spell it now pretty often.
Oh, okay.
I want people to know. But I wasn't paying attention. I was drinking some whiskey.
I noticed you don't spell our website.
Oh yeah, because that would take 20 minutes.
Yeah, we should probably change that. Just go to twobullsinachina.com. That works too.
They can,
number
can't
2.
they? Oh, but they can't send an email to twobullsinachina.com, can they?
No, that doesn't work. Unless you want to buy another email subscription.
I don't.
Other things that I want to buy, I'd rather pay for postage to give away free shit.
Yes. Isn't that our biggest expense?
Yeah.
There you
I
have
think
it,
so.
folks. We love giving away shit for free. You know who loves helping for free? You can go check out their YouTube stuff. No cost to you. The amazing gentlemen over at Orderflow Labs, they were kind enough to share their toolkit with us to check out for trading futures on Sierra Charts, Motive Wave, and NinjaTrader. They've got brilliant custom studies for structure and execution, buy-sell zones, exhaustion absorption detectors, reconstructed tape, Job pinches, just amazing stuff, something for everybody. Constantly adding and testing new studies. They offer brilliant support to help you use their tools. You might remember them from such podcast episodes as Back to the Futures that we do here on our show. Just really, really fantastic stuff. Do yourself a favor. If you are trading futures, check them out at orderflowlabs.com. Did that make sense? I may be a little drunk.
It sounds like you're getting there. It made enough sense.
Enough sense? Okay. Whew. All right. Good. Time to talk about some stocks.
Yes.
Stock time! Now it's talk about stocks time. Looking for setups, it's still not advice. Big moves, fresh news, and earnings. All that we're saying, it's still not advice. Stock time!
Please don't sue us.
Okay. All right.
Who's going first? How many stories do you have?
Well, I went first. I have two stories, and I went first in the news, so I feel like you should go first at the stocks.
I kind of wanted to end with my last one.
Okay, I'll go first. All right. Since we were just talking about energy kicking ass, right?
Yeah.
I got a nice little story. We actually mentioned in one of our news, I think it was earlier in the week. It might have been last week. Talking about Warren Buffett coming out and announcing like what he bought and what he sold.
Mm-hmm.
Well, one of the things he bought some shares of Occidental Petroleum.
Mm-hmm.
And well, it turns out that they've now, as recently as Friday, the 19th of August, have reached out to receive regulatory approval to purchase up to 50% of oil giant Occidental Petroleum.
He wants to buy the entire company then, huh?
That's what it looks like. Yes.
That's a pretty bullish bet on oil, I'd have to say.
Right? It is. Their shares jumped 10% on the news.
Yeah, I'm not surprised.
They closed the week at 71.29, which puts their gains for 2022 at more than 145%.
Nice.
Yeah. Very good year on the Oracle of Omaha buying their shares. And then the speculation is absolutely that he will continue to move forward and just buy the whole damn company.
Is this part of his plan to shift us to green energy? Buy an oil company and then shut up shop?
Shut it down. He does have the largest holdings of those lithium facilities on the Salton Sea. They are like 90% owned by Berkshire Hathaway.
That is something a billionaire would have to do, right? Something a billionaire could do. Is he like low key, like the supervillain that we weren't really talking about?
Yeah. Last time we were talking about billionaire supervillains, we were like, well, Warren's okay, right?
Yeah.
Well, I don't know. Is it super villainous to be like, I'm going to position myself to profit off of electrical vehicles and shut down oil? Is that really super villain?
Well, I don't know. Depends what you do with that money, I guess.
Depends on your opinion of oil.
And money.
And money. But okay, he's said that he only does friendly deals. So he's definitely talked to the board.
Oh yeah,
at OXY is their stock ticker. He's definitely talked to them, and the speculation is like if he was talking with them about buying them out at like $95 or $100, then he's just every share he can get below that is saving him money.
Right. So
snapping up every share he can just makes sense.
What's it trading at now?
It ended at 72 and change. 71.29.
95 to 100. Is that the price the article mentioned, or is it something that was thrown around from somewhere else?
Well, that was the article mentioned it, but it was a quote from a gentleman named Cole Smead, president of Smead Capital Management, and a Berkshire shareholder. Which, you know, when your share price is 400 grand, a Berkshire shareholder is saying something. I own some shares. Oh wow, that dude's rich.
Even if you own one, you're doing pretty good.
Yeah, right. I would love one share.
Yeah, me too.
Yeah, right. So the market is very much a fan of anything Buffett does. Retail traders have been, you know, rushing in, following him, driving the price up themselves.
Yeah.
But, you know, still under $100 and still something.
He does a lot better than Kramer does.
You know, I would love to see Buffett guest host Mad Money.
I'd love to see Buffett fill in for me. Think he'd do that?
Okay, we'll call him up. Let's do it.
All right. My dad used to live in Omaha. Maybe he knows him. Nebraska's not that many people in Nebraska, right?
Kyle, I would take Warren Buffett's dog as a co-host.
No kidding. All right. Is it my turn?
Yes. What do you got?
GM has reinstated their quarterly dividend.
Ooh.
After more than 2 years of not having. They've reinstated a rate of 9 cents per share on the common stock. I mean, that's not quite what it was, you know, back in 2020 when it was suspended, which was 38 cents per share. But the fact that they are reinstating that has got to be good news for the company.
Yeah.
Anytime you're just giving money away, that means that you're probably through the cash crunch.
I wouldn't call a dividend giving money away.
Was it a bribe to continue holding shares?
I would call a dividend your cut of the company's profits because you own the company. That's how much the company you own. You should be getting a cut because you're owed it. You're an owner.
What do you say about any growth company?
I say people are speculating that one day their stake in the ownership will be profitable.
Gotcha.
Mm-hmm.
Okay.
Are they doing buybacks too? Not after the Kristen Cinema buyback tax.
No, I'm not seeing any buybacks on here on this 3-paragraph article I'm reading.
Well, call them up.
No, but let's see. Oh, in July, it looks like Ford also reinstated their dividend too. So maybe this was just more of a keeping up with the Joneses or the Fords.
Keeping up with the Fords.
Yeah.
What is Ford's dividend at?
I have no idea.
Ford's a lot cheaper.
It's a 3.72% yield.
15 cents a quarter? Damn, according to Google.
I don't know what 9 cents a share comes out to be even percentage-wise. I could tell you if you want.
So if 9 cents is the quarterly dividend, then 36 cents is the annual dividend. So 1%?
Yeah, okay. So much less. Sorry, I was trying to do math after chewing on gummies.
Yeah, blame the gummies, Kyle. Blame the gummies.
Oh, shit. Are we still recording?
Oh, shit, yeah.
I thought you paused it. All right. So yeah, it's not a great dividend, but it is there. It looks like it's more just to say like, hey, we can do this. It's not all shit.
Not all shit.
The stock actually looks pretty interesting where it's at too. Looks like there's a pretty key turning point right over at 39.70, which is right where it closed. If it can close above that, I think it's probably got a good shot at hitting its 200-day moving average around 45.
Yeah, it just cleared a high, right? From May, beginning of June.
It tried. I think it closed pretty much right at that. So Monday should be very interesting. What else you got?
Company that's probably never going to pay a dividend ever again. Regal Cinemas. They're having a tough time. Its stock crashed as much as 80% on Friday after reports that their parent company, Cineworld Group, is going to file for bankruptcy.
Oh, that's not good for them.
No.
Unless I can pull a Hertz and issue new stock while they're going through it.
Yeah.
It's funny, they're blaming a limited roster of films for the lack of moviegoers, but I thought AMC was like touting the films that they got. Do they get different films?
Well, they might. I mean, I've definitely seen how there's like the main Hollywood presentation, but then there's indie films, and I've even seen some movie theaters like they'll play the Bollywood films from India.
Been a long time since I've been to a theater.
Yeah, right. Lately, I've been seeing some of them playing the Japanese anime movies. Like some locations will play them, some won't. So they don't all have the same. I'm still trying to find the Cineworld stock. Yeah, Cineworld stock is opened at 37 cents. It's down to 19 cents. on Friday. They
Sounds like a screaming buy.
They started the year at $3. Yeah, right. Screaming buy.
Can only go down so far.
Right. A week ago they were at 70 cents. Ooh, not looking good.
No.
For Cineworld Group ADR. Yeah, they're blaming low movie offerings, but I don't think it's movie offerings that are keeping people out of cinemas.
No, probably not.
Like we talked about earlier, people's habits in the pandemic changed, and I really think people just got used to streaming. And let's face it, a movie goes to the theater and it's like in the theater for 2 weeks and then it's streaming.
If you're choosing which movie theater to go to, more than likely, I got to think you're probably going to AMC just because you've seen it in the news and think that, I think I'll go support these guys.
I'm an avid moviegoer. I like to go all the time. Mm-hmm. I love to see it on the big screen. I love films. I love analyzing them and breaking them apart, having a good time. I actually prefer Century Theaters. They have a much more comfortable theater. Their whole experience is more luxury to me. Mm-hmm. I only go to AMC because it's like 3 miles from my house.
Quantity over quality.
Right. Well, and it's I just don't want to drive across town.
Yeah.
I only have so much time in my life.
Well, you also don't want to double your expense too by paying for gas.
Yeah, exactly. Which, as we said, energy's going up.
Yeah.
Yeah, I think if you're a movie theater and you're not looking for ways to grow and expand beyond movies, you're doing something wrong. AMC is doing a good job with we'll show the big pay-per-view match. You can come see it on our big screen.
Yeah.
That kind of thing. They're doing it right. They're actually trying to survive, and that says to me they're serious about it.
Are they talking about price elasticity anywhere in their board meetings?
No, they're talking about dividends, splitting a different. Remember, they're splitting off to a different stock.
Okay.
Like we're not gonna issue more shares, but we will issue a sister share.
Oh no, not AMC. I was talking about Cinemark.
Oh, Cineworld,
the Regal, the one we're just talking about. Yeah,
Cineworld. Yeah, they did not talk about price elasticity that I'm aware of.
Okay. All right, starting to run a little long. Should I blow through this last one here?
Yeah, go ahead.
All right. The title of this is A Wave of Layoffs Sweeping the U.S., and it's just a list of companies and how many people they've laid off. So I thought I'd just kind of go through and comment on some of the names on here. So Peloton, over 4,100 people. Shopify, about 1,000. 7-Eleven, 880 jobs cut.
Wow.
Venmo, I guess it's like a YouTube knockoff.
Venmo?
6% of its workforce. Venmo, not Venmo. Vimeo.
Vimeo. Oh, that's Walmart. Walmart's video service.
Oh, Walmart owns it?
Yeah, it's like Movies on Demand, where you can buy digital copies of the movies.
Well, 6% of their workforce is looking for another job.
Ooh.
Tesla, 229 people laid off. Rivian, about 5% of their workforce. GoPuff, 10%. Remax, the mortgage company, 17% of its workforce.
Wow.
Microsoft, very little. Only they said less than 1%. JP Morgan, over 1,000 in its home lending department.
Oh.
Compass, 450. Redfin, 6%. Coinbase, 18%.
Oof.
Carvana, 2,500 people, or about 12% of its staff.
Yikes.
There is a lot in here. A lot of companies. Robinhood, more than 300. Wells Fargo, unknown number in mortgage and lending.
Seems about right. Wells Fargo doesn't have hard numbers on something they do. We laid some people off.
How many of those employees know they're working there?
Yeah, right. They'll figure it out when they can't log in. They get to work on Monday.
No. So how many people on the books did? Have they filled out job applications for people without telling them?
Yeah, how many people work for Wells Fargo that don't know they work there?
Yeah, exactly.
Oh, that's awesome.
Makes it a lot easier to lay people off.
Yeah, right? Oh, fuck you, Wells Fargo.
Yeah. Thank you. All right. Should we move on? Crypto?
Yeah, let's talk about some crypto.
I got some crypto in my wallet, hanging out on my Ethereum blockchain. Yeah, I got some crypto in my wallet, Doji, Sushi, Polka Dot, NFT. Decentralized, anonymized, fabulous cryptocurrency.
Okay, Kyle, what big crypto stories you got for us?
Well, remember how we just mentioned Cardano laying off a bunch of people?
Yeah.
That's my big story. Cardano, the coin, the value of the token or the crypto has dropped about 15% after a developer jumped on Twitter and shared his misgivings about their much anticipated upgrade. This is developer Adam Dean. He wrote that, quote, "It's important to point out today that the Cardano testnet is catastrophically broken due to a bug in Cardano node V1.352. That is the upgrade. That's the Vasil upgrade." So the article kind of goes through to explain what that upgrade actually is. But Dean also said that the rollout of the upgrade is being rushed and that more testing is needed. He said that if it was a nuclear clock, we got perilously close to hitting midnight.
Wow.
Founder Charles Hawkinson hit back at the accusations, labeling them bizarre and alarmist. And he assured his followers the offending code has been removed and the planned upgrade has been thoroughly tested.
Thoroughly.
Yeah, so the crypto fell about 15% in the 24 hours following that tweet. For context, Bitcoin and Ethereum were down about 9% in a similar period. But the article here is saying that the claims are worrying. If Cardano delays the upgrade further, it's going to erode confidence. And if it pushes ahead with a technically flawed upgrade, that could indeed be a catastrophe. Yeah, so not looking good for Cardano. They're kind of in a no-win situation.
Yeah. I mean, when you've got the two sources fighting like that.
Well, one is a person who has to work with the code. And the other is the person who has to answer angry investors.
Right.
Who's got the... Which ones? Who do you put your faith into?
Right. Who knows more about the code? The coder or the marketing guy?
Well, it says he's the founder. He's one of the founders.
Okay.
So I assume he knows how to code, unless he just...
I wouldn't make that assumption.
I have an idea for a coin. Make it for me. You'd think he would know something about it.
He should know. He should know something about it. But when he's contradicting the guy coding it currently,
it did not say. At least I didn't notice if he was like actually the person working on the code for the upgrade, or if he was just somebody who's like a developer for other things that use Cardano's network.
Oh, okay.
And in fact, that's kind of the way I took it. He's somebody who works with their blockchain.
Okay.
Not necessarily for Cardano.
Well, looking at the price charts for cryptocurrencies this year, I'm gonna side with the coder.
Yeah. All right. Is that the only story we got, or you got one too?
Oh, I got one. The headline is Ethereum's merge is about to put every Ether miner out of work.
Oh wait, hang on. I don't know if I want a spoiler on this one. I was hoping our Skydles would be the one to merge with Ethereum.
Oh no. It's not Skydle. And I don't think it's the kind of merge you're thinking of.
Shit. Well, there goes my lottery ticket.
Yeah. Well, I mean, the lottery ticket's still good. It's just not gonna pay off right now.
It's not a sure thing anymore.
Yes, because it was always a sure thing. No, Ethereum, and we talked about this a long time ago, but we'll bring it up again because it's now happening. Ethereum is shifting from proof of work to proof of stake.
Oh, that's right. Okay.
So instead of the much derided buy a bunch of fucking graphics cards and have them do busy work to prove you earned the crypto token, Ethereum or Bitcoin, they're going to do proof of stake, which is
busy work that proves you own it.
No, it actually makes me kind of bummed, because as much as I hate the proof of work, because I'm like, why are you doing all this busy work using electricity and resources for nothing? Now it's like, oh well, proof of stake. So the more if you put up your Ethereum coins, like if you have Ethereum coins, that's your proof of stake.
Oh. Okay, that's what
You're
mean.
staking the coins. So the more money you have, the more stake you can
The more you can stake. Oh,
yeah.
Okay.
So to me, this shift could not be the best.
This means that if you're just if you're not a big corporation trying to mine it, that you're probably going to be not liking this. Like, it's not going to be good for you.
Yeah, if you only have 2 Ethereum to stake versus the 200,000 of the mining company that just had
El Salvador,
that just sold all of its graphics cards because it won't need them anymore and used it to buy more Ethereum.
Right. Oh shit! Does that mean graphics cards are cheap now?
Hell yeah, graphics cards are going to start going down, man. You'll be
Fuck
in
yeah!
no time,
All right.
yeah. One coin, one vote is the new principle.
So where does my 3/5 of a vote go?
Oh, boom! Take that, slaves.
Yeah.
Yeah. So it's they've got something they call the Beacon Chain, which has launched December 2020 to kind of, it's going to be the new chain for the proof of stake. And nobody's been using it yet because obviously people are still using the Ethereum chain. The merge that's about to happen, we don't know the exact date, but it's going to happen when the Ethereum network hits a preset terminal total difficulty, some weird term measuring the aggregate quantity of computation the miners have performed. They estimate it's going to happen sometime in mid-December, and then they're going to merge the 2 chains.
But if everybody's selling their graphics cards, it might take a while.
Well, people won't be selling their graphics cards to early September at the earliest, mid-September at the earliest.
Okay.
And of course, the headline of fears are that the Treasury Department is going to have more control over Ethereum when they move to the proof of stake. I don't know why. I didn't really read the whole article. It was like 10 pages long.
It was so long.
So long.
So long. It was ridiculous. Like, Jesus, it's like the plot to the merge.
Yeah, right.
Is that like the porn version of Purge?
The merge?
Yeah.
Like one day a year you can fuck anybody you want?
Everybody, yeah. Anybody goes outside.
God damn it, Kyle. We need to make a movie and it needs to be a porn.
God damn it, we do.
Yeah.
All right. While you think about that, reach for the sky.
Ah, God damn it, you got me. I'm thinking about fucking over here. Okay, all right.
You're fucking shot.
All right. Well, my good this week, I think it was a theme. It wasn't any one instance, but it was definitely the theme of, hey, I made some money today. And I should say, no, my theme was, hey, I'm only trading good levels. I'm only trading good levels. I ended the week up for the week. I had several good days and only one bad day. And it was just all round good week of sticking to good levels.
It's not just that too. It's the walking away when you don't see anything else too. Like, you've been doing a fantastic job of that.
I was going to say that, but I realized even today I did come back and I was like, this level's too good.
Yeah, but it fit with your strategy, didn't it?
Oh, it totally did. It totally did. And I did walk, and I did win the second time too. Like, and okay, I did manage to stay away because it came back to that level, and I could have traded it again. And I was looking at it like, do I log back in and trade this? No. I've already made my money for the week. I can walk away.
Oh man, that's fucking great. That's awesome.
Yeah. Finally coming together.
Well done.
Thank you.
My good was stat tracking.
Stat tracking!
Been screwing around with taking all the data from my journal and trying to figure out a fun way a clear, easy way to filter through all the results so I can start looking for trends. And I gotta say, like, just the exercise has been really restoring my confidence in myself and my setups.
Hell yeah.
Like, I was feeling pretty down, I think around the beginning of July, and been trying to build myself back up. I kind of wish I would have just started doing this then.
Oh, yeah.
Because when you could throw like a P&L graph on it, look at all your trades for the month and be like, oh, that's just a line that goes straight up every day. Like, oh, seems like maybe I do know what I'm doing, even though I'm sitting there like stressing over every single one of them.
I guess I'm doing all right.
Like, it's got me back to that same excitement that was there when we first started collaborating with Flary and the guys over at OFL for the Back to the Futures. So, and I think once I get this thing put together, I'm going to make it a template so that way anybody who wants it can download it.
That sounds good.
Yeah. See if I can make a version for options too, if you want it.
Yes, please. Yes, please.
All right. What was your bad?
trading terribly on Thursday, not trading my good levels. The one day.
I remember what happened that day, I think.
Oh yeah? What would you say?
Didn't you start the day off by saying, like, I am high on opiates. I shouldn't be trading right now.
Yeah.
Is that the day?
That was the day.
Oh, okay.
I was, I didn't rest enough from my vasectomy. And so Wednesday I did way too much. I was on my feet running around too much. And so I woke up Thursday like, oh God, what did I do? And I took some opiate painkillers, and well, the rest is history. If I hadn't traded Thursday, I would be up a stupid amount this week.
Oh, really?
I mean, I'm up a good amount for the week. I think my portfolio is up 5% for the week. I would have hit 15% if I hadn't traded Thursday.
Oh.
All of my losses for the week were on Thursday.
Oh, wow.
Yeah, every single one.
All right.
No.
So what do we learn?
Don't do drugs, kids. Don't trade on drugs, kids.
Don't trade on drugs. Wait till you're done trading.
Or just take a fucking day off, right?
You can do that too.
I took weeks off, and I'm like, I can't take a day off.
I know, right? Isn't that funny?
How weird is that?
Like you feel like you're missing out on some opportunity.
Yeah.
Like, no, take the day off.
Take the day off.
We're self-employed. We decide when. If you don't see something, you don't like it, walk away.
Walk away, right? Nobody's forcing me to trade.
Except me.
Kyle, right. Yeah, you were saying we weren't going to be friends anymore if I didn't make trades on Thursday.
I'm a better accountability buddy than
I
that.
know.
My bad, I think. I was just being gun shy throughout the entire week. It felt like it wasn't like I missed a lot of setups because I was just looking for more confluence, like wanting more confirmation. And then by the time I got my confirmation and then like decided like, oh, maybe I should enter, then it was already gone. It was a similar issue I'd been having probably 2-3 months ago.
Yeah.
And I think this time it actually stemmed from having like my start to the week wasn't all that great. I think I was pretty much flat going into Wednesday. And then weighing in the back of my head is I don't want to put in a red week. So that I was just looking, I was being a lot more selective of what I did take, and I ended up missing out on a lot of good opportunities.
Yeah. You got to find that happy medium. Don't overtrade.
Right.
Don't undertrade. Go ahead and trade your levels. Like when the setup's there, like take your risk. Don't be afraid to take risk, but just don't take too much.
That was how I traded on Friday. And like Thursday, I spent most of the day working on that tracker. So that was kind of like the process of what I was trying to do to help myself. But that led to Friday. Like I took one trade, but it was a really good trade. And I've decided, okay, I'm done. I don't need it anymore.
Yeah. Well, that's really when you can walk away from the table up, that's a win every time.
Right.
I think that's how I also end up spending all my money in casinos.
You don't walk away from a heater?
Yeah, right. I'm on a roll.
Did you have an ugly?
No. I mean, I guess you could call trading on opiates ugly, but like I said, still green for the week.
I think we can call that ugly.
Okay. I'll say this.
No. Okay, sorry. What makes it ugly was you saying before you even sat down to trade. That's what makes it ugly.
Right. Oh, I shouldn't try and kiss this rattlesnake on the mouth. Oh, you're so cute. You need a kiss. To me, the ugly was the it wasn't necessarily the first trade, but I think I had four losing trades in a row on Thursday, and I would say the fourth trade was ugly because that was the first one that was out of risk management.
Oh, okay.
Right. Where it was I should have been. Risk management said I was done for the day because I'd lost too much money.
Mm-hmm.
So I'll say, yeah, definitely.
Yeah.
Definitely.
Okay. That's a good one. All right.
Okay.
Should we wrap this thing up?
So let's make a bet. What are we looking at here? Oh wait, we got a song for this. Yeah.
I need it, wanna feed it, gonna win it if I take it from you. I'm filling my positions, quit your bitching, random's gonna lose. Got a chart full of levels and a stop that's not too tight. It's bet picking time in the shop, so pick 'em right.
Okay, Kyle. What are we looking at here?
All right. Well, I have one that I like, but it might be a little late. I'll let you look at the chart and make your decision. Live Nation. I shorted this thing on Thursday afternoon because it was sitting in a sell area that used to be a buy area. It was rotating there. Volume was dumping.
What's the ticker?
LYV. So I'm already short this thing, but it's still got plenty of room to get to my targets. I think we're 85 and like 70 or 80 half.
Gapped down on Friday. What's causing the gap down? Any news? Earnings?
No news that I saw.
Oh, earnings beginning of the month.
Yeah, it had earnings on the 4th already.
Oh.
It was the reason why I got it was just, maybe everyone saw that. Same thing I did. The declining volume, the price struggling to get back above a key level, which is right around 100.
Oh, yeah, look at that.
So
and
it just looked like it was, it looked like a typical, reversal setup.
Okay, if we're going to short Live Nation, then we got to take profit at 91, at least half.
Yeah, I think you're right. And then 85 for the other.
Yeah. Well, I mean, I would say 87, but 85 would be 87.
87? Okay.
That's me. And I'm not convinced Live Nation is the trade.
Nope, that's fine. What do you got?
I want to short Jim Cramer. I think Ollie's Bargain Outlet Holdings is the one.
Okay, I could go with that. Out of all of them, yeah, Ross already started.
They've got earnings coming up September 1st, and it looks like I don't know. We ended the week on a doji candle. Volume is getting lower and lower on an upswing. I mean, resistance held at 72, and then resistance held.
That sounds pretty good.
At 68. I don't know.
Okay, where would you put your take profits and stops on this one?
I guess my first take profit would be 62, and the second one would be 59.
I would take 58 for this. Oh no, 59. Yeah, never mind. Yeah,
I'm trying to put the take profits a little above, like if it's short, a little above where I think it's going to go.
Yeah.
That's my vote, but I'm willing to cede to your judgment because I've had a lot to drink.
All right. Well, Ollie, your stop's going to have to be somewhere around 68 half.
Yeah, definitely.
Live Nation, their stop's going to need to be at 100.
Mm-hmm. 5% versus almost 5%. Let's flip a coin. Oh God, we can't let random be a part of this. Shit.
No, fuck that.
I'm just saying. Both of them have a stop where random's never going to overtake us. Like, I don't think either can lose.
All right. Who picked last week's?
I did? Yeah, I did. Yeah. Okay. You picked this week.
Okay. Live Nation.
All right. Let's do Live Nation. All right. Live Nation. Okay. Shorting Live Nation.
And Random. Random has picked ACB.
ACB.
Aurora Cannabis.
Uh-oh.
Oh, they're not scheduled to vote on this, are they?
No. They're down, but they're down on lower volume, and they're.
What's scary about this one is that it's $1.50, and it's been in a expanding range, by the way. That runs up to almost 50 cents. That's like a 25% range.
It just broke out of its range this week or a week ago. Yeah, Monday. Monday just broke out of its range, and then it descended through the week. And if you look at the volume profile, it's about right where you'd expect it to catch.
Yeah, 50% or so.
I'm actually looking about are there options on this? I might buy some calls. Shit. Oh,
shit.
Damn.
All right.
Good job, Random.
Good job,
God
Random.
Damn it.
You might have done it again.
Well, we'll see. I don't think it's going to get to $3. Well, what would it have to get to overtake us? God damn it, $2 would probably do it, right?
Yeah, I think so.
Oh, shit. Okay. All right. Well, if we lose this month, I'm going to be so disappointed in us.
If this closes at $2, it's gonna have somewhere around $700.
Yeah. Oh, wow. Okay.
Should we change our pick?
Okay. to what? Aurora Cannabis?
Bed Bath & Beyond. Short that thing. Is this the last pick of the month? Or no, we got one more.
We got one more, but you won't be around next week.
Oh, all right. Oh, good. So somebody else get the consequences.
There you go. Yeah. All right, there you have it, folks. Kyle and I are Short and Live Nation. Random, that son of a bitch, is going long Aurora Cannabis. We'll be back at you next week. I'll be back with you next week. Kyle's going to be on vacation because it's long overdue and he deserves it.
Oh, thank you.
Until then, happy trades.
Bye, everybody. Like, rate, and subscribe.
Yeah, do the things, that you're supposed to do. Do them. Two Bulls in a China Shop is an entertainment program, and all thoughts and opinions expressed in the show belong to the hosts and not of any company. They are not intended to provide specific advice or recommendations for any individual or on any specific security or investment product. It is only intended to provide entertainment about stocks and the financial industry of trading. If you make trades based on what you hear in this show, you assume all risks for those trades.
As we get older, we start to notice our parents could use a little help. Help with grocery shopping, getting to appointments, and just keeping up with things around the house. For the times when we can't be there, Care.com makes it easy to find senior caregivers who live nearby and know just how to help. And since all caregivers at Care.com are background checked, you can be confident that your mom or dad is getting support from someone you can trust. Find senior caregivers for your parents at Care.com.